Hey everyone, welcome back to the channel. Today we're talking about the best ETFs for long-term growth in 2024. Look, I get it, everyone's always looking for that golden ticket, that one investment that's going to make them rich. And while I can't promise you'll be swimming in a vault of gold coins, I can share some strategies that have worked really well for me over the years. We'll dive deep into historical performance, sector allocations, and projected growth for the coming year, so you can make informed investment decisions. Ready to see which ETFs could give your portfolio a boost in 2024? Let's jump right in. Before we begin, please note that this video is for informational and educational purposes only. I'm not a financial advisor and the information provided should not be considered as financial advice. Always do your own research and consult with a certified financial professional before making any investment decisions. Investing in ETFs in the stock market involves risk, and past performance is not indicative of future results. Alright, let's kick things off with a real heavy hitter in the ETF space, the Vanguard Growth ETF, or VUG for short. This ETF is one of the most popular choices for investors looking to tap into the growth potential of the US stock market. Now, VUG focuses on large-cap US growth stocks. These are the companies that have already made a name for themselves and are continuing to grow at a rapid pace. And when I say large cap, I'm talking about the titans of the market, companies that are already established, have a proven track record, and are continuing to expand. These are the giants that dominate their respective industries. Think about the big names you hear about every day: Apple, Microsoft, Amazon, Tesla. These companies are not just leaders in their fields, they are innovators pushing the boundaries of technology and business. These are the kinds of companies that VUG gives you exposure to. By investing in VUG, you're essentially buying a piece of these industry leaders. These aren't your fly-by-night startups hoping to strike it rich. These are the companies that are already shaping the future. They have the resources, the talent, and the vision to continue growing and innovating. Now, a big chunk of VUG's holdings are in the tech and healthcare sectors. These sectors are known for their high growth potential and their ability to drive the economy forward. These industries are known for their innovation and growth potential. The tech sector in particular has been a major driver of economic growth in recent years. Just look at how much technology has advanced in the last decade alone. From the rise of smartphones to the development of artificial intelligence, the pace of innovation has been staggering. From smartphones to artificial intelligence, it's been an incredible ride, and VUG positions you to potentially benefit from this ongoing tech revolution. The healthcare sector, too, is seeing rapid advancements, particularly in areas like biotechnology and medical devices, and historically speaking, VUG has delivered. Over the years, it has provided strong returns for its investors thanks to its focus on high-growth companies. I mean, past performance isn't always indicative of future results, but it does give you an idea of how this ETF has performed. It's a testament to the strength and resilience of the companies it holds. And let me tell you, the numbers are impressive. VUG has consistently outperformed many other investment options, making it a favorite among growth-oriented investors. But here's the thing, and this is crucial. VUG is designed for long-term growth. This means it's best suited for investors who are willing to hold on to their investments for several years. This isn't about trying to time the market or make a quick buck. It's about investing in solid companies with strong growth potential and letting your money compound over time. Patience is key here. It's about investing in solid companies with strong growth potential and letting your money compound over time. The power of compounding can significantly boost your returns if you stay invested for the long haul. Remember, investing is a marathon, not a sprint. It's about staying the course and not getting swayed by short-term market fluctuations. And with VUG, you're essentially betting on the continued success of the American economy and the innovative power of these leading companies. By holding VUG, you're aligning your financial future with the growth and prosperity of some of the most influential companies in the world. Now let's shift gears and talk about going global with your investments. And no, I'm not talking about buying a plane ticket. I'm talking about the iShares MSCI Emerging Markets ETF, or EEM for short. This ETF gives you access to a whole new world of investment opportunities. With EEM, you're tapping into the potential of emerging market economies. We're talking about countries like China, India, Brazil, places where the economies are growing at a rapid pace, and there's a ton of room for expansion. Think about it. As these countries develop, their citizens' incomes rise, leading to increased consumer spending. That translates to more demand for goods and services, which is great news for businesses operating in these markets. And that's exactly what EEM gives you exposure to. Companies that are poised to benefit from this surge in economic activity. Now, I'm not going to sugarcoat it. Emerging markets can be volatile. There's always political risk, currency fluctuations, and other factors that can impact returns. But here's the thing. With higher risk often comes higher potential reward. And by diversifying your portfolio with EEM, you're essentially betting on the long-term growth story of these emerging giants. Now, I'm not saying you should go all in on EEM, but allocating a portion of your portfolio to emerging markets can be a smart move for investors looking to capitalize on global growth opportunities. Historically, emerging markets have shown impressive growth, often outpacing developed markets during certain periods. By doing your research and understanding the dynamics of these markets, you can make informed decisions. It's crucial to be aware of the risks involved and to consult with a financial advisor to tailor your investment strategy. Remember, investing in emerging markets is often a long-term play, aligning well with retirement planning and future financial goals. As global trends continue to evolve, having a stake in emerging markets can provide a valuable hedge against domestic market fluctuations. So consider reviewing your portfolio and see how EEM might fit into your overall investment strategy. With the right approach, EEM can be a powerful tool in your investment arsenal, offering both growth potential and diversification. So why not explore the possibilities and see how you can benefit from the dynamic world of emerging markets with EEM? Alright, now let's talk about something a little more, shall we say, cutting edge. If you're the type of investor who wants to be at the forefront of innovation, then listen up because the ARK Innovation ETF, or ARKK, might be right up your alley. This isn't just any ordinary ETF, it's a gateway to the future. This ETF is all about investing in disruptive technologies. We're not just talking about incremental improvements here, we're talking about groundbreaking advancements that have the potential to redefine entire industries. We're talking about companies that are changing the game in fields like artificial intelligence, robotics, genomics, and more. These are the sectors that are poised to lead the next wave of innovation. These are the companies that are shaping the future, and ARK gives you a front row seat to the action. Imagine being part of the journey as these technologies evolve and mature. Now, I'll be straight up. ARKK is not for the faint of heart. It's an investment that requires a certain level of risk tolerance. This ETF can be volatile. The nature of investing in cutting-edge technologies means that there will be fluctuations. I mean, we're talking about companies that are pushing the boundaries of what's possible. They're venturing into uncharted territories, and with that comes a level of unpredictability. So yeah, there are going to be ups and downs. It's not a smooth ride, but for those who can weather the storm, the rewards can be substantial. But here's the thing. Over the long term, ARKK has delivered some pretty impressive gains. The key is to stay invested and not get swayed by short-term market movements, and that's because innovation is where it's at. The companies in ARKK's portfolio are at the forefront of technological advancements. These are the companies that are solving the world's biggest problems and creating entirely new industries. They're not just participating in the market, they're leading it. Think about it. Just a few decades ago, the internet was this newfangled thing that people weren't sure about. It was a risky investment back then. Now, it's an integral part of our lives. It's hard to imagine a world without it. And the companies that embraced the internet early on, well, they reaped the rewards. They became the giants of today. ARKK is about identifying the next generation of game changers, the visionaries who are going to shape the future, the companies that are going to revolutionize the way we live, work, and interact with the world. Investing in ARK is like having a stake in the future, a future that's being built today. All right, let's move on to another ETF that's all about riding the wave of technological innovation. The Invesco QQQ Trust, or QQQ for short. This ETF tracks the NASDAQ 100 index, which is basically a who's who of the biggest and brightest tech companies in the US. We're talking about companies like Apple, Microsoft, Amazon, Facebook, Google, the list goes on and on. These are the companies that are at the forefront of the digital revolution, and QQQ gives you direct exposure to their continued growth. Now, you might be thinking, hey, isn't that similar to VG? And you'd be right, there's definitely some overlap. But QQQ is even more heavily weighted towards tech. So if you're really bullish on the future of technology, QQQ might be a better fit for you. But here's the thing about tech companies, they're not just sitting still, they're constantly innovating, expanding into new markets, and finding new ways to dominate their respective industries. And that's what makes QQQ so exciting. When you invest in QQQ, you're not just investing in today's tech giants, you're investing in their future potential. You're betting on their ability to continue to innovate, adapt, and thrive in an ever-changing technological landscape. Alright, let's wrap things up with an ETF that's all about playing it safe and steady. The Schwab US Broad Market ETF, or SCHB for short. Now this one's a little different from the others we've talked about. See, SCHB isn't about chasing after the hottest sectors or trying to pick the next big winner. It's about broad diversification. This ETF gives you exposure to over 2,500 US companies, large, mid, and small cap. We're talking about everything from Apple and Amazon to companies you've probably never even heard of. And that's the point. SCHB is like the ultimate set it and forget it investment. You're not trying to time the market or pick individual stocks. You're simply investing in the overall growth of the US economy. Now I know what you're thinking. Graham, where's the excitement in that? And you're right, SCHB isn't going to make you rich overnight, but that's not the goal here. The goal is slow, steady, long-term growth. It's about building a solid foundation for your portfolio that can weather any storm. So if you're looking for a low-cost, diversified way to invest in the US stock market, SCHB is definitely worth considering. Thanks for watching. If you found this video helpful, make sure to like and subscribe for more investing content. What ETFs are you watching for 2024? Let me know in the comments below. As always, do your own research before making any investment decisions, and I'll see you in the next video.